Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Friday. It's October 13th. It's Friday the 13th. Wow. I hope everybody's having a good morning, and I hope everybody had a wonderful week. And I hope you guys have been posting, or not posting, watching and reading my posts in the Telegram channel. If you haven't, you should subscribe. I've been giving a lot of free trades there, and they're worth money according to a lot of our readers, and, well, they are. I've been killing it with them. And by the way, if you held JD last night, it's down another 4% to the short side. You're welcome. Subscribe to the Telegram channel. Go to rogerscott.com/Telegram and join me in my VIP room that's happening today at 11 a.m. You don't want to miss it. And then we've got Ask the Pros, and I'm going to be on there as well. All right, now let's get into all of the good stuff. I did that in less than a minute. And by the way, you can find all these details in the Roger-Scott YouTube channel. Just go below the video, and all of these links are laid out for you there. All right, so as I anticipated based on the closing yesterday, Nasdaq is down 50. That's not that great. That's significant. That would be equal to the Dow being down about 120 points. This is borderline random. But the fact that the Dow is up 29 points and the Nasdaq is down 50 makes it even worse. So not liking this at all. I think, let me just check, and I have a little feeling that energies are getting a bump. Let's see. Yes, they are. They're definitely getting a bump. And I remember somebody telling you that while this fiasco in the Middle East is going to be happening, that energy prices are going to be elevated. And they sure are right now. Blue chips have been actually holding on pretty good. Tech stocks have been holding on pretty good, but I think we need to have a little bit of selling pressure coming in. The bond market looks like it's consolidating or staying around this level right now. Yields are lower because we have flight to quality, because we have a global turmoil situation right now. Don't know if it's going to last very long, and we could potentially see bonds go down. Although I personally believe some of the Feds are using the current global fiasco as an excuse not to raise rates for the foreseeable future. Basically, they wanted to do it anyway, but this is a good reason. Well, let's see what happens with the world, which is one of the reasons why technology stocks rallied really hard with the yield cooling off and communication sectors leading. Now, today, you've got consumer sentiment at 10 a.m. and you've got import and export prices. These are not huge reports, but I would pay very close attention to consumer sentiment because it could have an impact on the market as well. You've got earnings today with Wells Fargo, BlackRock, Citigroup, UNH. Now, Wells Fargo already reported. Let's take a quick look. Let's see here. Let's look and see what Wells Fargo reported. And it looks like they're up about 2.34%. Let's look at a couple of other bank stocks just to get an idea. Let's look at Citigroup, okay? Citigroup. Just to get an idea. It's also up. That's good. That's positive. If you're looking at the banking sector, which we're not really getting any indication yet, but let's look at XLF. The XLF is also up a little bit. So far the numbers are okay, which is one of the reasons why the blue chips, why the Dow is probably above the Nasdaq for the time being. Now, keep in mind, we're still below the averages. We're below the 200-day, 100-day, and the 50-day. So I would be very cautious at what I see today from the bank stocks. I would be more curious about what they say. Also, Morgan Stanley, broke down and is right now, doesn't have much support till 75. So if things turn south, you may see a little dip in Morgan Stanley. Goldman Sachs also doesn't look great, kind of bouncing off the 8-day EMA below everything. There's a good chance it will go lower as well. So keep your eye on Goldman Sachs and Morgan Stanley. And today you've got United Healthcare, UNH, Citigroup, and BlackRock. Some are reporting before the opening bell. Some are reporting after the opening bell. You should have this. I send it out on my Telegram channel for you yesterday. If you haven't subscribed, go to rogerscott.com/Telegram. I promise you it's the best decision you will make this year. I'm not joking. I really mean that. It's the best decision you will make this year. Now, looking at the economy, let's talk a little bit about what's in the news, and then I'll turn everything around, tie it up in a bow tie with technicals for you, and give you some stocks to look at as well. So S&P's lower on Thursday as hotter than expected U.S. inflation data bolstered bets on Federal Reserve rate hikes while investors geared up for earnings for big banks. That's what we've been talking about. Delta Airlines dropped over 2%. We shorted American Airlines. Was it American? We shorted an airline stock yesterday. It wasn't Delta, but it was an airline stock, and we did pretty good on it, actually. Actually, we did pretty good on every trade we put on yesterday. We scratched two, but the rest were solid. Labor Department report on Thursday showed consumer prices rose, but core CPI, which is what the Fed looks at, eased from 4.1% in September from 4.3% in August. That's significant. That's pretty good. The smallest increase in 2 years. Jobless numbers were a no-brainer. They've been very, very solid. Now there's only a 30% chance that the Fed is going to raise rates in December, and they're not going to raise rates in November. That's not going to happen. As I mentioned, we've got JP Morgan, Wells Fargo, Citibank, BlackRock, PNC Financial, United Healthcare. Crude oil is up because of the Middle East fiasco. We got consumer sentiment. I talked about that. We got U.S. import-export prices. Europe down. They've been keying off of U.S. for the last few weeks. Investors digested inflation data from several European economies with concerns about global economy, which is really what's driving the market, and lackluster data from China. China closed lower. Now, for those who say I don't do global market analysis, I do global market analysis in my morning videos every day because it's important to know if China, Japan, and Europe are giving us a tailwind or not, or if we're going against the wind. The Shanghai Composite closed lower after the latest data showed persistent weakness in the economy. Official data on Friday showed that consumer inflation rates unexpectedly flatlined in September, while factory gate deflated continued, indicating the economy's path to growth remains fragile. Very, very bad. Nikkei closed lower, tracking Wall Street's decline. They're keying off of us, as I mentioned. Not China, but Japan and Europe. They like to key off of U.S. a lot. After hotter than expected U.S. inflation data fueled bets for a more hawkish stance from the Federal Reserve, all sectors of the Nikkei ended in the red, with real estate and financials experiencing the largest decline. Keep your eye today on real estate and financial stocks with big banks reporting. We shorted Netflix yesterday. We scratched it. Probably should have, or made a little money on it. Probably should have kept it. It's opening down 1%. It's now below the 200-day moving average. As one of the reasons why we sold it yesterday. And boom, there you have it. So if you held it overnight last night, good for you. There's no major support till right here, and that's about 10 points away from where we're at. The stock looks like it's in play today. Don't be surprised if you see me short Netflix today. Just giving you a little freebie. Yeah, it looks like it's got a clear poise down. And as much as I love watching Netflix, the company's just sucking it right now. They're just not doing all that great right now. And as I mentioned, there are earnings on several stocks. I would be very, very careful in trading these stocks only after earnings comes out. So if you're day trading these stocks, that's great. But don't hold these positions overnight unless you know if earnings are coming out. And right now we're in financial sector. Now let's tie everything together for you. Let's look at the price data here. And then I'll talk about what algos have been doing. So as you could see here, we are right now, looks like we want to come off of these levels. Now, if we come off, if we trade below 430.91, don't know if we will, but if we will, that sets up a nice little pace for a little downside action right here. The fact that we took out a 2-day low yesterday, right here, the previous 2 days low is not a good sign, and the fact that we bounced off the 100 and the 50-day line is bad either. It's not good either, and it looks like we're now going down on this channel. We went up, and now we're going down. I'm expecting the markets to go down, but I'll trade them either way they go. But I think the sentiment is going to be more bearish than bullish today, unless those financial stocks can take us out of that. Don't know if that's going to happen or not. So keep your eye on the S&P 500 on the SPY level of 430.90. On the QQQ, let's see how we're looking on the QQQ. On the QQQ, we're actually not doing as bad. We're still above the 50-day moving average, although today I think will be the last day. But what do I know? I'm not a mind reader. I only react to the markets. I can't predict the markets. I'm not that smart yet. But if we break down right here, there's a good chance we will break down here as well. Now, does that mean we're going to be going into the abyss? No, we're still very, very choppy. the market is very, very choppy, and it's been choppy for several months because the economy hasn't really changed its tune. Remember the Fed, wait and see? Well, that's what the economy's doing. We're waiting and seeing. But hey, we're not making new lows, and we could be making new highs, maybe even before the end of this year on technology. So let's not rule anything out. The Dow Jones is bearish. We hit the 200-day moving average to the upside, bounced off. We're below it now, and I think we're going to be entering this zone right here, the nasty flat zone. We're not there yet, but again, we're below the 200-day moving average. We're below the 100, below the 50. We're almost below the 8-day. That's so bad. But again, I think we're going to come down here. But again, I think we're going to stay choppy. Yesterday, VIX got elevated, which wasn't a good sign. And again, let's see if we can go a little higher on the VIX today or not. And if not, that'll be it. But again, VIX is another factor you want to look at. Keep an eye on it overnight. If you see spikes like this, that tends to turn the market bearish. Yesterday, when the VIX did this, when it started doing this, I started getting a little bearish. It works really good intraday for sentiment. Now, as far as sectors are concerned, right now, you still have technology, QQQ. Communication fell from first spot to third spot, so be careful. But it's still, this is all QQQ, man. This is all QQQ. Then you've got the S&P 500, but what part of the S&P 500 is rallying? Well, definitely the technology, definitely the communication because they're part of it, but also consumer discretionary is coming up. It's not down here anymore. So consumer discretionary, basic materials, and industrial. Now, sometimes these stocks get hot and heavy during war because we're going to need a lot of industrial material. There's a lot of defensive stocks in here. Defense companies rally. So watch those Lockheed Martin, those type of stocks. Watch out for that. Energy's not doing great. Let's see if today we get a little bit of a boost. Small caps are doing crappy. And boy, oh boy, consumer staples and utilities and financials, they haven't been doing well at all. And this is what the funds have been doing all week. They've actually been buying up consumer discretionary. They've been buying up industrial. Algos have been buying up industrial and basic materials. They've been selling the hell out of Russell 2000, consumer staples, and utilities. And I think that trend may continue unless we see a major, major shift, which I don't know if we will. I'll be ready. I'll be trading all day on Telegram. Keep your eye on there. If you don't know how to subscribe, go to rogerscott.com/Telegram. Before I let you go, and by the way, VIP room, 11 a.m., we go through our swing trades. Oh, yeah, it's like that. I don't mess around. Folks, it's not too late to get in on your very first perfect Tesla trade alert. That's right. Lance just issued his first late Thursday last night, so there's still plenty of time to get in ahead of Tesla's earnings next week. Lance discovered a market irregularity that's specific to the shares of Tesla. And when leveraged the right way, it shows the ability to pay out returns of 100% or more in 6 days or less. In fact, according to his data, it happened more than 20 different times over the last year. Wow. That's like what? One every couple of weeks. Time is running out, so get in your first perfect Tesla trade today. You don't want to miss out on this. Follow the link below. If you don't know where to find this, go to YouTube and go to the search bar. Go to Roger-Scott. Post comments. Send me emails. Good, bad, critique. I'll take anything. Roger@rogerscott.com. Again, find all this info below the video in the YouTube channel or join me at 11 a.m. in my VIP room, and I'll see you later. I hope you guys have a great weekend. I'm sorry I've been out of commission all week. I've had a stomach bug, but I've tried to be here as much as possible with you. Bye, guys. Take care. Have a great weekend. I look forward to hearing from you and your success stories on all the stocks you've been trading in the Telegram channel over the weekend in my Roger@rogerscott.com email. Bye, guys. And post comments below the video. I love those comments.